Hello guys, so today my team and I is going to present about taxation. So the topic that we're going to present is about basis of a Malaysia income tax system. So before I move to our next member to present their points, I'm going to introduce my group members. So the first one is myself. My name is Amir Shakir bin Selamat Merianto. And then the second one is Aizat Aika Zafran bin Rohizat. And then the third one is Nur Ayu Shamila binti Amluddin. And then the fourth one is Nisa Naswa binti Nur Rumzi. And the last one is Nur Atira binti Muhammad Fazil.
Assalamualaikum and hi to everyone. My name is Aizat Aika Zafran. So today I want to talk about taxation. I bet you guys already know about it, but I want to talk clearly about it. Taxation is a practice of government collecting money from the citizens. The money is used to pay for public services. Paying taxes to government or official has been mainstream or civilization since ancient time. We already know about the meaning of taxation, so now we move to objective of taxation. The first one is economic development. Economic development of any country is largely conditioned by the growth of capital formation. It is said that capital formation is the kingpin of economic development. The second point is price stability. Taxes are regarded as an effective means of controlling inflation. By raising the rate of direct taxes, private spending can be controlled. Naturally, the pressure on the commodity market is reduced.
So next is the scope of charges. Under Section 3 of Income Tax Act 1967, it stated that income tax shall be charged for each year of assessment upon the income tax of any person acquiring in or derived in Malaysia or received in Malaysia from outside Malaysia. So the scope of charges is divided into four, which is the first one is the territorial basis, the second one is the world scope basis, the third one is the foreign source income, and the fourth one is the derived and remitter basis. So territorial basis is income that are earned in Malaysia. And second one is the world scope basis. It's a resident company and non-resident company are taxed on territorial basis except for the resident company that carry on business in specialized industries such as insurance and also banking. And the third one is the foreign source income. Foreign source income is not subjected to tax in Malaysia except for insurance and also banking. And the last one is the derived and remitter basis. It's income that derived in that country and overseas income received in that country will be taxed.
There are basically two types of taxes, which is direct tax and indirect tax. Direct tax is a tax that paid straightly to the government. It is computed based on the taxpayer's ability to pay. The higher their capability to pay, the higher their taxes will be. For example, in income taxation, the person who earns more revenue will pay more taxes. Direct taxes cannot be passed on to a different person or entity. The individual or organization upon whom or which the tax is levied to is responsible for the fulfillment of the full tax payment. The example of the direct tax is income tax, poll tax, land tax, and personal property tax. On the other hand, indirect taxes is a tax that can be passed on to another person or entity. It is usually imposed on a supplier and passes to the consumers. So, in order for us to get the goods and services we need, we have to pay indirect taxes. The example of indirect taxes is sales tax, excise tax, custom tax, and gas tax.
Okay, next is classes of income. There are 6 types of classes of income under Section 4. The first one is Section 4A, which is business income or gain or profit from business income. Next is Section 4B, gains on or profit from employment, or we said that employment income. Next is Section 4C, dividends, interest and discount. Section 4D, rent, royalty and premium. For Section 4D, pension, annuities or other periodical, and also Section 4F, other profits or gain.
So now, I'm gonna explain about my points, which is basis period, basis year, and year of assessment. So we will go through to the first one, which is basis period. What is basis period? Basis period is the period relative to a year of assessment. The period for which sole proprietorship and partnership pay tax every year. And then basis period is equal to accounting year. And then for the second one is basis year. So basis year is the calendar coinciding with the year of assessment. The period must not exceeding 12 months. So for the last one, which is a year of assessment. So year assessment is a year in which income tax to be charged and be calculated. Assessment for the income earned in the preceding year starting from the 1st January and ending on 31st December. Year assessment is equal to year calendar.
So next is chargeable person. Under section 2, the Act defines a person to include a company, a body of person, and also a corporation. So body of person is an unincorporated body of a person, not a company, including the Hindu company. Hindu company means any income of the family manager of Karta in his capacity, such as being income by virtue of section 55 to 59.
I think that's all from us. I hope you guys enjoy watching this video and could get many inputs from the video for the topic about basis of a Malaysian income tax system. So lastly, before you guys end this video and leave this video, I hope you guys can hit the like button and share this video to your families and all the one that you know. So thank you for supporting us. Bye bye.